Okay, we are live. We'll give it a second here for everybody to let into the lobby. Welcome, welcome. Yeah, right. I got my little banner up. All right. Well, welcome everybody. We got everybody in. My name is Logan Edmonds, CEO of TTS. I am joined here by the wonderful and very friendly Andy Runyon. Andy, why don't you go ahead and introduce yourself, sir? Introduce.
Yeah, that's all good. Andy Runyon, I'm our MSP, Client Success Manager, Partner Success Manager here at Fifth Wall. And essentially, Fifth Wall is a cyber insurance wholesale specialist. All we do is cyber insurance and tech E&O. And my job is to kind of have my finger on the pulse of what our MSP, MSSP, tech broker, compliance partners, anybody that comes to Fifth Wall and says, "Hey, we need help with this insurance thing," or "We would like education, we'd like marketing help." I kind of keep my finger on the pulse of what they're hearing nationwide. So it gives me an opportunity to kind of stay up to pace with and abreast with the things that are going on in the channel in regards to insurance and client experience.
Nice. All right. Hey, I'm gonna put a little quick thing in the LinkedIn chat because StreamYard's dumb. I can't comment on LinkedIn from StreamYard.
No,
Hey
it's all
everyone,
good.
welcome to the presentation. All right, man. Well, let's dive right in real quick. So let me do a quick introduction of myself personally for the audience. Those of you who don't know you, because yours was way better than mine. I just said, hey. So my name is Logan Edmonds. I'm CEO of TTS. We specialize on the proactive side of things. So we're not insurance brokerages, we're not insurance agents, but we do a lot with cybersecurity and cyber risk management, specifically in making sure that risk is being managed for the transference side of things, that you're maintaining a risk posture that is appropriate for the size and type of business that you have on the cyber front of things. Myself, personal note about myself, I've got a wonderful wife who works with me at TTS and a small young daughter. She's 2, going on 3 actually this weekend, which is hard to believe, man. It's time's flying.
It flies. It
No doubt.
flies, brother. My oldest is 14 now, and my youngest is 4, and it's just it's rolling by too quick.
I can't believe where 3 years go. Uh, what are we talking about today, Andy? Well, I think the crux of what we're talking about, obviously cyber insurance, that's the easy answer. But
Right.
the real topic behind today's thing is standards change on the insurance side.
Correct.
And cyber, I would say the standards have been changing at a breakneck pace comparatively to the rest of the industry of insurance.
Yes. Yes.
And again, who determines these standards? It's the insurance company. So I want to get your perspective, right? Like, what are they determining? What
Sure.
what are these new standards? But there is a truth behind insurance, and you can tell me if you agree with this statement, which is when it comes to insurance, you either comply with the carrier standards or
Mhm.
you don't get coverage. Those are the 2 options on the table, and there's nothing in between. Would you agree with that statement?
Yeah, no, 100%. I mean, at the end of the day, insurance is a contract, right? I mean, so like, I'm obviously you can tell by my background, I'm a sports guy, right? Like, if I'm a professional player and I sign a contract for 30 million, and it says don't go ride dirt bikes, right? And I take off and I go ride a dirt bike and I break my leg and I can't play, they can void that contract, right? Same thing with insurance, right? Each carrier gets to kind of set forth, here are the things we want you to do, or the things we don't want you to do, right? And once you sign off on that contract, if you're in violation of that, you can have your coverage voided. Now, what has changed, right, is that the stipulations of what is needed to place that coverage and enter into that contract has changed massively since prior to the pandemic. Back pre 2019, and people that have heard me speak on this are probably sick to death, but it's the truth. Are you a marijuana shop? Have you had a loss in the last 2 years? Those were the first 2 questions. And if the answer to both of them were no, it was like, oh, great. Well, what's your revenue? How many employees? Here's your policy. 3 grand for $1 million in coverage, right? And so, and I mean, I know we'll get more into this, but when the pandemic hit and cybercrime shifted down to Main Street, right, things massively changed. Underwriting changed, premiums changed, deductibles changed, coverage changed. There was a window there in 2020 and 2021 where insurance companies really realized how poorly they were underwriting and evaluating cyber risk.
I mean, it was one of those things where the problem presented itself. It felt like overnight in a lot of ways, right? Like 2020 was a watershed year for a ton of reasons. COVID,
Right,
obviously.
right.
Work from home became a major issue to deal with from lots of employers. And of course, the adoption of cyber tools. all of a sudden you saw SaaS and cyber tools that allow people to work remotely from home. The adoption just skyrocketed because they had to.
Sure.
All of a sudden, businesses were dealing with new kinds of risk that, from the grand perspective, happened in a heartbeat. And compared to what you normally see in business over a period of 5-10 years, it totally makes sense to me. I mean, we all know this picture, right? And I grown up this picture because it's happened to me more than once because I got a bit of a lead foot, right?
Maybe a couple of times, maybe just a couple.
I'm sitting there going, I got a ticket. I hate this. What's the next thought goes through my head, right? Oh, dang it, my insurance is going to go up, right? My insurance is going to go up every single time. And that's the part that gets me right here, right? Like I can live with the ticket and even necessarily the points on my license, the insurance part. I'm like, I'm going to be paying on this for the next 7 years. That's what I thought the last few times I got a ticket. And so it's true here too, right? Like we need to comply. If we don't comply, we're in for a world of hurt. Now, I want to be careful with this next thing. This story has been used with fear of uncertainty and doubt to club people over the head all across the place. And that is not what we're trying to accomplish today.
No.
Whatsoever.
No.
But there is a lesson to be learned from this story, and that's why I want to talk about it. For those of you who don't know the story, I'll lay it out. And Andy, you can feel free to add anything here if I'm missing anything. But long story short, there was a company called ICS out of Illinois. They had a traveler's insurance policy where they did all the warranty attestation stuff. I think it was like $1 million in coverage they got. They got ransomware. It was very expensive. Travelers did what Travelers does when they file a claim. They brought in the breach coach, the forensics. They did an investigation to figure out what the heck is going on, what needs to get paid, what needs to get done. And they realized that the warranty missed a test to where ICS really was cybersecurity-wise. Things like MFA wasn't turned on across the environment, even though ICS checked the box saying they had done that. And so Travelers said, look, this is just bare minimum gross negligence stuff, right? Like you misattested your risk posture on a signed contract with us. We shouldn't have to pay this. And the judge of the trial and the appeals courts all agreed with them, right? Like they don't have to pay this. Anything I'm missing there?
No, I mean, that's a really good high level look at it. And it has caused, I mean, this has kind of created a boogeyman in the space of like, if you like sign your name wrong on your application, your cyber coverage is going to be denied.
No.
I mean, reality somewhere in between, right? I like this case, but I hate this case in a way. I'm really glad you brought it up. I think it's something that needs to be talked about. But it has created a lot of misconception out in the channel and with clients both. But no, I mean, but think, we keep referring to other types of insurance. Think if I took out a life insurance policy, and when I applied for that life insurance policy, I said, I don't drink, I don't smoke, I'm fully clean 42-year-old male, right? And then they find me in a hotel room, 2 weeks from now, and I've got nicotine, alcohol, and a little bit of meth in my system. Is that life insurance policy going to pay out?
No.
Probably. I mean, no, it's not. I mean, probably it's not going to, right? And like, and that's, I mean, so I mean, what I'm saying is like the precedence is out there, right?
Yes.
But because people are more ignorant about their cybersecurity structure, and because this type of insurance is new, and because cybersecurity is foreign to them, people are like, oh my gosh, these dirty insurance companies, like, the precedence has been there forever, right? Like if you say that you're doing something that you're not doing and a loss happens because of it, that loss isn't going to be covered.
If an insurance company consistently doesn't pay a claim, it's not going to be around for a while, right? Like it has a core function. People aren't going to buy it. Like it never made sense to me to say you're going to buy insurance that never is going to pay a claim, right? Like that then why would you buy the insurance? That's not what we're saying here. What we're saying is what I consider gross negligence, right? And I'm not a lawyer, pastor's not a lawyer, but what I consider gross negligence in cybersecurity space, that standard has changed in the last 5 years. What we considered before 2019, you probably could have gotten away with, you're not going to get away with in 2024. So understanding what is gross negligence, and to be clear, I'm not advocating that you do the bare minimum. That very rarely ends well for anybody who does the bare minimum. I'm just warning you in advance. Because of the risk management, bare minimum and good risk management just don't go together. We'll get into that. So let's go to the next one, right? Like, so first and foremost, we kind of laid out the agenda, but I want to make sure we're clear. First off, is cyber insurance necessary? We're both going to say yes, obviously, but we'll lay out the case why it's necessary.
Slightly biased, but yes.
Slightly biased, but yes. What's the market look like in 2024? I'm definitely excited to hear your insight, Andy. Like, what is the cyber insurance market? What are these new standards we're talking about, right? Like, I already mentioned MFA and a couple other things. We're going to go through that in detail. And then what should the people attending our event really know as an action plan, right? Like, what should they be considering as next steps when they walk away from this event if they're interested in pursuing the cyber insurance and cybersecurity side of things. Sure. So first and foremost, cyber insurance necessary is the big question. Andy, no bias, right? Is cyber insurance?
None at all. Well, here's the question I ask people, right? If I go to the bank and I take out a new business loan, right? The bank's going to require that I have at least $1 million of general liability, slip and fall, right? They're going to require that I have building insurance that will fully indemnify them if the building is a total loss from a tornado or a fire. But Logan, I'll pitch it back to you. What is shutting down small businesses at the highest rate right now? Is it grandma slipping and breaking her hip?
It is cyber attacks.
It's cyber attacks.
Look at this.
It's cyber attacks, but the banks aren't requiring cyber insurance. So I mean, to me, not only is it necessary, it's necessary in a sneaky way in that the people that are loaning you money haven't figured out that they need to require that you have it. So it's really
100%. We just dealt with a case recently, and I can talk about this because it's all public news. I'm not going to mention the name of the organization for obvious reasons, but it honestly was a small municipality had a department around here. It was a town here in Central Ohio. Budget was like $1.3 million a year. It was not a big department, right? Like we're talking like 6-7 people on staff kind of a deal. And they were hit by an attacker for $710,000 straight out of their accounts. Their OPEX account they had like a loan basically attached to their OPEX account for like a line of credit. That thing was maxed out almost. It's all public news. So yeah, you got this organization that said, oh crud, we just lost half our annual operating budget in a single attack. Well, what's the first thing a lot of our audience is going to think of, right? Well, doesn't things like, general business insurance, FDIC, doesn't that cover that? No, you have to have a specific policy. So FDIC is for the banks fail, first off. I really get tired of this misconception.
I hear it all the time, man.
It does not cover wire fraud. There's blanket exception to wire fraud in FDIC. You have to carry an insurance policy if you want coverage on that. And that is typically, and you can talk on this, a cyber coverage with some kind of fraud or, financial theft, language put into that policy is what I've seen. Is that accurate?
Yeah, and I mean, it needs to be discussed explicitly because there are a bunch. One of the things, listen, I'm not a full defender of all cyber insurance. There is crappy cyber insurance out there. There is really, really poor, warm and fuzzies. Oh, my agent gave me something and I have cyber, but I don't have certain coverages. And cyber crime and funds transfer fraud and invoice manipulation and social engineering are one of the first things that a carrier that's writing a cut rate policy will pull out, right? So not only do you need to make sure that cybercrime's on that policy, right? You need to quantify what your potential cybercrime risk is because most folks will only carry up to $250K or cover up to $250K.
Absolutely.
So if you have more than that, right? Like let's say you're regularly wiring 300, 400K and you have that exposure, you need to talk with your agent and you need to go out and get an additional crime policy that serves as an umbrella on top of your cyber coverage. So not only do you need to know that you have crime, you need to know what your risk is. That way you can properly address if you need to get another policy.
I do want to also tack on this too, right? Like this is a growing problem. This is not diminishing in threat. This is growing year by year at a breakneck pace. I think by the numbers alone, there's an argument to be made nowadays that the cybercrime trade, like the economy of cybercrime, exceeds the drug trade in terms of actual amounts of value it extracts from the American and global economies. I was reading a story not even that long ago of it's a really sad story. I put it on LinkedIn. I'll see if I can dig up the link and repost it after this webinar. But it was like a bunch of people being held hostage, Indians from India, a bunch of Indian citizens being held hostage in Malaysia, 5,000 people, like full-blown human trafficking. What were they being held hostage for? They were being used to run call center scams, to scam money, because that operation was outputting $60 million a year in estimated profits. This is a problem. It is a money problem, and it's not going to go anywhere. So insurance is important, in my opinion.
Sure.
We have to have it, especially when we know sooner or later, based on statistics, everyone is going to get hit. And kind of illustrate that, right? Like if you're uninsured, the stats are not in your favor for coming back from a full-blown attack. Now, there's different degrees of attacks, right? Like there's a difference between I clicked an email and a pop-up came on my screen versus someone took $700,000 from my bank account, right? But understand when we get to that point where you would normally call an insurance, that attack, we're seeing somewhere a little less than 1 in 2 of businesses that don't have insurance policies just never really fully come back from that. The damage either sticks around or they just go out of business, 1 to 2. And that's, for me, putting on a business owner hat for a second, because I am a business owner. That's terrifying, right? Like, this is my life's work. You're
Yeah.
telling me if I get hit and I don't have the right kind of coverage, I have a 1 in 2 chance of just either A, losing a chunk of my life's work, or B, losing the whole thing. That's a rough pill to swallow.
100%. And I visited with a buddy that's a small business owner. I mean, he, as related to the Change Healthcare, United Healthcare, right, breach. And
Yeah.
he mentioned that he got really good advice. He's a dentist, really good advice in dental school to kind of, squirrel away, store away like, a month to 2 months worth of income before he started, right? And this wasn't even his breach. It was somebody else's breach, right? And I called him and I said, "Hey, how's everything going with Change Healthcare? Are you guys back up and running? How did it affect you?" And he goes, "Man," he goes, "if they hadn't have told me in dental school to stick away, 4 to 6 weeks worth," he said, "it would have gotten really, really hairy, really, really quick. And even with that, if he had lasted 2 more weeks, I would have started having some major issues. They would have been looking at maybe having to miss payroll." Right.
I mean, we talk a lot about this fancy term, supply chain, but basically this means, right, like, businesses want to trust that when they do business with another business, they're going to be around after an attack, right? I outsource stuff in terms of like business partnerships to other companies. I know almost every business under the sun does the same exact thing. And that tracks. We're seeing more and more contractual obligations and just general preference, right? Like 60% of executives, when it comes to B2B sales, especially if you're in an issue of intellectual property, data management, key tooling, if you don't have adequate insurance, almost 60% of them would say, "I just don't want to do business with you because there's too much risk there," right? Like, I want to have some kind of guarantee because I know sooner or later, if I'm thinking honestly, you're going to get hit, that you're going to be around after you get hit.
Yeah, and we're starting to see this more and more. It started with the government, right? I heard back in like 2020, 2020, it was really 2021. I hit the road with CISA and did a couple events with their Arkansas director. And he was saying, "Hey, we're heading into an era where cyber insurance is going to be required if you do any type of government contracts." Well,
Yeah.
obviously, he spoke very prophetic words because we're there. We see all the time entities will come to us and say, "Hey, we've got a $5 million requirement from the state of Illinois or Kentucky or Arkansas or whatever." But now where we're headed from there is the private sector is just following, right? And like, I'm sitting there and I'm going, "Look, I know about the Target breach. I know that the Target breach absolutely smoked Target, and it started with an HVAC contractor, right? Like, if you're going to do business with me, before that contract starts, we're going to have a cyber insurance conversation."
I mean, let's talk about this for a second, right? Like you said, private sector. A good chunk of our audience that registered today is coming from the biotech pharmaceutical space, right? And how that world works is a lot of times you're completely backed by funders in the beginning, right? Like, you're not profitable until you have, if you're a drug, for example, until you can make get through clinical trials, get FDA approval, get to market. Like, that's a multi-year process. And what we've been seeing more and more on the VC side of things, like if they're getting investors to give them the capital to get off the ground, they are putting contracts together that say you have to carry $2, $3, $5 million in coverage. And if you don't carry this coverage, we aren't going to fund you, right? Like, the investors want some guarantees here. And so privately, you're talking about private, there's no government mandate there. It's just literally they're seeing this is an unacceptable risk because your entire company is intellectual property at this point.
Yep.
What happens if someone comes in and takes that? I need to know that there's some hedges here, right?
Yeah.
And so,
no, and I don't know that you and I have talked about this explicitly, but like my work history involves pharmaceutical sales, right? And I know very, very firsthand how crucial that first year of launch of a new drug is, right? Like I don't even know if I'm at liberty to talk about it, so we'll keep the names out of it, right? But I mean, I was in the early phases of a couple of drug launches, right? And they'll tell you, hey, if we can get early adopters within this first 12 months, right, the odds of the long-term success of this drug are much, much higher, right? Well, guess what? That coin has another side to it, right? If we're in clinical trials or before the boat sails, right? Or if we're in that launch phase and we have a massive breach that financially limits the company, or if it gets patient data out or whatever, right? I mean, you could come up with a million scenarios.
I mean, another thing
it's going to be majorly negative to the success of the prescription as well. Anyway.
Yeah, and one of the things that concern me about that specific industry, and we can move on after this though, is they are their intellectual property until they hit market, right? Like that their formula, what they're developing, it's where all the capital's going, and what we're seeing, unfortunately, from my side of things as a defender, extortion tactics. are
Yep.
becoming more and more of a thing from threat actors. They can't ransom you necessarily, like traditionally speaking, like ransomware makes your data unavailable because you've got to segment out the cloud. So they just take the data and they say, look, if you don't pay us to go away, we're just going to dump this on the clear web and tell everyone where to look at this, right? And by the time you get down, the genie's out of the bottle. And all of a sudden, it's out there for the world to see. When you're developing a multi-$100 million drug, you want to keep that under lock and key for sure.
And you see it, we've seen it in agriculture too. When you think about like seed technology, any type of, pesticides, things like that, when that stuff's in the development phase, like that's your golden goose, right? Like you want to protect that. You want to protect that intellectual property as much as you can.
Well, let's segue to the next point then, which is a lot of people assume their business policies they're carrying, their D&O, their E&O, their liabilities, like that they have some kind of clause or coverage in here. And that can be true is my understanding, but the way the market's shaping up, it's not. It's more often not than it is. What's your take on that? This is where I have you, Mr. Insurance Expert, to speak on this.
Yeah. The vast majority of business owner policies will exclude cyber, right? Unless you have explicitly asked for some type of addendum. Now, this is where I have to be careful with my soapbox, right? Because I'll talk about this for 20 minutes. But those addendums, by and large, are horrible, right? Like they give clients the idea that, oh, I asked my agent for cyber. He's told me I have cyber. We're good, right? No, you're not. You may have, a 200. I've seen a $40 million auto dealer that had cyber, and they had $250K of coverage with a $50,000 sublimit for ransom payment at a time where the average ransom payment was over $400K, right? Those numbers don't line up. Even if they had the full 250 and that was applied to business income for them, that was about 8 hours of business income insurance. It's like a day,
I see a lot of from a non-agent perspective, right? Like people say, like, I go get new clients like, hey, I like to know what kind of insurance they have just because I'm going to be working with the IR team if something happens and being that guy, right? And so I'll ask them like, hey, what kind of insurance do you have? And they'll send me these policies and they'll have like an addendum for like $100,000 of data breach coverage, right? Well, a lot of people don't understand. Data breach coverage only covers data breach. It's not financial fraud. It's not ransomware. It's not, public relations. It's just if you have regulatory penalties and fees for losing your data, they're going to cut. I mean, again, probably a little more than that. If I'm being honest, like it's a very subsection limited policy. But in their mind, they're thinking, well, I just got $100,000 blank check. I'm a $2 million company. That should be enough, right? Well, for a lot of reasons, the answer is no. That's not the case at all. But it's a very nuanced conversation, and not everyone's equipped to have it. And not every agent, I should say, is equipped to have it.
And that's, I don't want to sound like I'm throwing agents under the bus, generalist agents, because I was a generalist agent back in the day. But very quickly, I realized I had this moment of clarity, right? Oh my gosh, if I'm going to learn to sell cyber the right way and do it well for my clients, I kind of got to focus on this because it's so nuanced and it's so different and there's no standardized language and every carrier does its own thing and it changes all the time and the underwriting is getting crazy. Well, and it's just, when you're in this position of a generalist agent, it's just very hard to keep pace with cyber.
Well, let's talk about that. A lot of people are sitting here and saying, guys, you're spending a lot of like uncertainty out here. Give us numbers, give us facts. I got you. So let's talk about the scope of the problem. In 2016, we saw carrier loss ratios on these cyber policies at around 67%, right? So every dollar they're taking in, they're losing about 67 cents altogether. That's not that bad, right? Like that's pretty decent. Come 2020, 114% losses. So for every dollar they're taking in, they're paying out $1.14. That does not work. That math doesn't add up. And that was the start.
Play that game long.
That was the start of a very long journey for the last 4 years in terms of how the market went. So we're going to talk about this, but they at first, I would say as an outsider, but someone who's got a little perspective, felt like they overcorrected a little bit. Like the policy,
100%.
Premium skyrocketed. It felt like everything had the most mild issue. And I called over to carrier. Oh, we got to do breach coaching forensics, right? Like that was very much the default. What was your take on that? Like 2020, 2021 between then and now?
Man, like I said, to my previous point, the underwriting pre-COVID was horrible, right?
Yeah.
And then insurance companies lost their tail in 2020 and 2021. So the pendulum swung way the other way. And it's like, oh, here's this 20-page app, and it asks a million questions about all these controls. And the answers are binary yes, no's, but we're just going to shotgun ask everything, right?
Mm-hmm.
And we're going to add these sublimits and these exclusions. And what you saw was where we've kind of exited on the other side of that is some of the company, and I still see it. We saw this today. We consulted on a policy today of one of the old heads, right? That's been around since pre-COVID that took those losses. They're still overcharging for premium today, right? Their underwriting has gotten better, but you can see that they're still, 20, 30, 40% higher than market average. And you can just kind of feel that they're still trying to claw back some of that 114%. And that's average. Some of them were worse, right?
Yeah.
They're still trying to claw some of that back. Well, here come the insurtechs, right? Your CFCs, your coalitions, your at-bays, Tokyo Marine, your folks that that weren't as active and didn't take that big hit. And they kind of came into the game at a hot time when that underwriting was kind of fixing itself. Well, guess what? They don't have any losses to recoup.
No.
They might write the exact same risk that you're offering old carrier for 40 grand. They may write it at 25. They may write it at 15. I mean, it's just, so what's happened is, and I mean, just to kind of not over, cook the goose here, but we're in a moment where cyber pricing is insanely variant, right? Like you could get a really, really good form full policy for $4 million for 20 grand, and then somebody else might quote it at 85, right? Like it is literally all over the place.
And to be clear too, like there's a lot of factors that go into that. Like one is just who's writing it, right? But other thing is history. Other thing is, industry risk tolerance levels, right? Like what's your exposure? For example, I know for being an MSP, my insurance always tends to be on the higher side because the carrier looks at me and says, "Oh man, you don't probably have your risk. You got all your clients' risks too, right?" Like that all trickles down to you, right?
So, y'all get that fun question of who are your top 5 contracts, right?
Yes.
Nobody else gets it. Nobody else gets that question, but you guys do.
So it's very much, it feels like to me as an outsider, a Wild West. But I think a couple things are definitely established at this point, which is the premiums have gone up overall. And that is probably a good thing based on our conversation because they were honestly probably too low before to actually sustain the market. 100%. So you are going to see a premium hike no matter who you go with compared to 2019. The other thing is the coverages. This slide's a little misleading, and I might need to mend the language down. It says coverages are 31% less. I want to say they're more targeted, right?
Correct. That's the deal. Yeah.
I feel like before it was more of almost like it wasn't really, but it kind of was like a blank check, right? Like if you get hacked, here's just a umbrella blank check. That's not how it works anymore. These are specific language or specific kind of damages that relate to a certain limits and sublimits. Like overall, it's very much the carrier is trying to be very cognizant and detailed about what they will and won't cover. That fair?
Yeah. And here's the thing, and this is going to sound borderline pitchy from our side, but it's just what I believe. That's why working with a specialist, and guys, we may not be your specialist. You may have a local specialist. There are other competitors in the market. It's why working with a specialist is so key, right? Mm-hmm. Like I said, you've got those old heads, you've got the BOP add-ons, right? Those coverage, those have been shrinking. There are things called sublimits, and what that means is like back in 2019, if you didn't have MFA, you still got $1 million for ransomware, right? In 2024, you ain't got MFA, you're gonna get $250K, maybe. Right.
Obviously, I had to put an application in for $2 million. The carrier just said, "Come back when you have MFA turned on." Like that was literally what they said. Is like, we're not taking this policy until you go turn it on. Like that is what it is.
So and that's what. So like as we talk about how the market is changing, right? I use the term selectively hard, right? And what I mean is like everybody knows what a hard market means, right? Mm-hmm. It means that premiums are going up, deductibles are getting more, all that stuff. Is the cyber market hard? Yeah, it's hard if you don't want to do what you're supposed to do. If you want to have poor cybersecurity practices, you don't want to put on MFA, you don't want to train your people, you don't want to have an IR plan, you don't want to execute a yearly pen test, guess what? You're entering a hard market. You want to do all that stuff and clean the kitchen before you try to go cook in it when you head to the market.
If you're not willing to
it really ain't a hard market.
If you're not willing to take your fair share of the risk management strategy, the carrier is not going to pick up the slack, right? Like they understand what is their responsibility versus what they're not going to take responsibility for, in my opinion. And so if you're saying, I want the carrier to be the entire risk transference on them, you're going to have a rough time. At the very least, you're going to pay for the nose. to keep that
That's right.
coverage.
Well, and here's the deal. Through those bad days, I mean, we had bad days. We had a lot of losses, right?
Mhm.
And we gathered a lot of good data too, right? And
Yeah.
it's pretty evident now what bad looks like
Yeah.
and what good looks like when you have a period of 2 years and all of these ransomware claims, and we get on the other side of that and we go, man, 82% of ransomware claims didn't have MFA turned on. Guess what? We know now that, I mean, like, we're maybe we can plead a little bit of ignorance back in 2018, 2019, but we know now that's a key control.
And it's working, to be clear, right? Like, profitability for cyber insurance coverage is up, like, and that's good. I'm being honest here. I don't want to live in a world without cyber insurance, right? Like, I'm all about proactive risk management. It's my bread and butter. It's what I live for. But at the end of the day, no one can 100% eliminate the possibility of getting hacked, getting breached, and having financial damages. It's just the world we live in. And I want a sustainable insurance market where my risk can be transferred for when all else fails, I can fall back on this, right? Like, I don't want to live in a world where I have to eat that. I call it the risk sandwich, right? I don't want to eat the whole risk sandwich 100%, right? But yep. I need to understand where that line is. And I think that's true for most of our audience. We talk a lot about, biotech and pharmaceuticals earlier, and that definitely much is something we focus on. But one of the things I tell them is you have to understand the market's changing, the insurance is changing, but more importantly, the criminals themselves are changing, right? Like a lot of times we're talking about ransomware right now. That's still very much a threat. Don't get me wrong. But that's because it was very much in the news on 2020. What I'm seeing now on the defender side, I've saw this happen actually in live time. We're not going to take your data. And we just found your crown jewels, right? Your IP. We just found whatever. And we'll reach out to the CEO direct on his computer because we own the environment and say, hey, pay us to go away, pay us so we don't go to your local journalism rag, that we don't go to, an open forum and blast all this. We don't go to your competitor down the street. Like, they have actually gone full extortion tactics on you, not just ransoming your stuff, but applying extortion pressure. And so what we're seeing is some of the silver bullets the industry is looking for in terms of technical capability. It just takes care of this issue. Criminals are smart, man. They're adapting because they like the money. They're making bank right now.
Constantly evolving.
Yeah, what does these market changes mean for you, right? It does mean higher premiums. It does mean lower coverages because the coverages were too much before on 2019. We're talking 2019 standards. And like you said, it does mean the underwriting's kind of getting its stuff together, right? Like, they have standards now. They have good data and they know what to expect out of you, and you're going to comply. Let's talk about those underwriting standards. So what does it look like if it's your first time getting cyber insurance, Andy? Can you kind of take me through that right now? What's the 2024 snapshot?
And I know, listen, this is going to sound salesy. It is not. This is the truth, right? We deal directly with multiple carriers. We have access to over 45 carriers. If you're listening to this and you do not have cyber insurance, every day that passes that you don't have coverage, you look worse in the eyes of the insurer, right? And I'm being dead serious. Like, one of the questions that the insurers will ask us is there a current policy in place? And if the answer is no in 2024, and they ask how long have they been in business and you're high revenue, they're going to perceive you as being like highly risk tolerant, which is not a good thing, right? So number one, you need to have some type of coverage in place. That's number one, right? The ability to qualify for first time coverage right now is much tougher than it was before, just because of what I said before, right? And then when we come up on renewals, what we are starting to see is, as those goalposts shift, to use a sports reference, right? We are seeing carriers say, hey, have you changed anything to your environment, or are we good from last year? Some folks, listen, I don't want to, paint with a broad brush and like do this big fear, mongering, whatever. A lot of people, if you're where you were last year, they'll just flat renew you, right? With maybe a slight increase, less than 10%. We're seeing that a lot now, right?
Okay. Yeah.
If you're higher revenue, if you're in a sector that has gotten its teeth kicked in the last year, right? Are there any changes to the environment? No, there hadn't been. Well, we noticed that you don't have MDR. We want to see MDR this year, right? Yep. We noticed that you don't have a privileged access management tool in place. We want to see PAM this year, right? So as industries get hit, as criminals get smarter, as the whole risk quantification and the whole evolution of the industry goes, with that is coming more stringent underwriting guidelines, where we are seeing, and those are kind of the two right now. EDR was really 2023. We saw a lot of conversation around EDR, right? And now at certain revenues and larger, in more, I guess, attack sectors, you're starting to see that shift to 24/7 monitoring and privileged access management.
So harder to get and harder to keep, depending on, again, with asterisk, your mileage may vary, but overall, the direction's moving and harder to get and harder to keep.
100%.
Okay. So, I mean, and I think this is true. The scrutiny I get filing a claim, like, I don't know, hopefully our audience has never been on the side of having to go through an incident response with an actual forensic firm. Sort of like it's like the digital equivalent of a prostate exam is the best way I can frame it, or a colonoscopy. Like, it is not a pleasant experience. It is painful. Right. They are looking under every corner, under every rock, because they have to paint as realistically as possible a holistic picture for the carrier to say what's going on and what's the situation that we're stepping in and taking the risk for. Same with a breach coach, right? Like a lawyer that specializes in breach law, just because the carrier's got to be advised based on your state, based on your industry, based on your private obligations, your government, your legal obligations, publicly speaking, like what are they responsible for paying out on? A lot of times it can be stuff as, I mean, every state in the union has its own data breach laws. For example, you might have private contracts that have penalties if you lose data and irresponsibly for B2B business. You might have, legal, if you're especially a publicly traded company right now, that's been a hot rage at the moment. The new SEC stuff and having to file like material public disclaimers within 4 business days of determined materiality. I mean, there's a lot that goes into this. So I don't want to say your claim is going to be denied. Mm-hmm. I might need to reword this one a little bit, but I do need to understand that cyber stuff is a long-tailed thing, right?
Yeah.
It's a very long-tailed thing. And so you're going to be looking on probably multiple payouts, if I'm being honest, in a lot of ways for different areas, right? Like we were talking about warranty versus insurance versus, like there's a lot of stuff. You're going to be my experience has been with data breach. You're dealing with the legal and financial ramifications for years to come where, this thing came up. Now I got to pay this. This thing came up. I got to do that, right? Like it's a long-winded process. Would you agree with that?
Yeah, and I will tell you this. This is a little bit of a breath of fresh air because anybody that's listening is going, "Oh my God, this sounds horrible," right? So let's kind of hit the pause. But you're right in all this stuff, by the way. 3 things. Number 1, get with somebody that knows what they're talking about, that can tell you exactly what type of coverages you should have, right?
Mm-hmm.
Within that conversation, get with somebody that can help you quantify your risk so you're buying the proper limits of coverage, right?
Mm-hmm.
And then thirdly, don't lie on your app. Now, those 3 things, right? Personally, 0 denials in 5 years, not a single one, right? So like I can tell you from my side of the fence, if you'll get with a knowledgeable agent, somebody that knows to tell you what type of coverage and how much coverage to buy, and you are honest on your application, I have not in 5 years had a single claim denial. So it's not all gloom and doom out there, right? And
no. My experience has been more of like sublimits.
Knock on back here, right? I don't want to have my first one tomorrow.
You're fine. My issue's been more sublimits, right? Like I've seen that where the policy is poorly written and the carrier says, look, we hit our sublimit on this damage. Like financial fraud's a great example. I dealt with a case where there was only $15,000 of financial fraud coverage and a $500,000 policy. Yeah, the carrier, and then, $100,000 plus was taken from their bank account. Yeah, the carrier said, look, we paid $15,000. That's the policy. We're not going to pay the rest of these damages, right? Like you agreed to this. And so when I say claim denial, I'm also putting that in there too, right? Like it's not. Yeah.
Let me toss another gem out there too. By the way, if anybody's still paying attention, if we haven't bored you to death by this point, if you have a deductible, right, that is a per claim deductible.
Yep.
You realize that in the event of like a massive ransomware event, you're probably going to have up to 8, 9, 10 claims, right? So guys, if you have a $25,000 deductible and you have 8 claims, guess what that means? Do the math there, math wizards, right? That's $200,000 that you're out of pocket, but you had insurance, right? So like getting with somebody that understands that can tell you, how that could play out, might play out, what the deductible means. We consulted on a client the other day that had a $250,000 per claim deductible, $250K per claim. Like you might as well not even buy insurance, right? Like
you're basically self-insuring at that point.
Yeah, no doubt. So anyway, yeah.
So I'm gonna push here a little bit because I want to make sure we're letting people out on time today. So compliance, right? You got to show due diligence. you got to actually pay attention to what you're signing on those warranties, these applications, and make sure you can show your, what's your teacher, show your work on your homework, right? Back in, you go back to school, you need to show your work. ICS at the end of the day could not prove that they showed their work. They didn't have the stuff they attested they had, and they couldn't prove it, so they didn't get paid. I mean, it does come down to that. Like if they had done the bare minimum of, hey, we're tracking what we signed to and we have it in place, that court case probably would have went 100% differently for them. I'll be honest with you, but they didn't do that. They said we don't care, and they got caught in the gross negligence trap. So what exactly are they our audience supposed to be diligent about? Okay, so this is sort of the bare minimum. There is the bare minimum. There is probably a healthy amount of what you should do, and then there's overkill. We're always shooting for the healthy amount. You don't want to do the bare minimum, but the overkill can get really expensive really quick. We're shooting for that middle ground. And so bare minimum, right? Like the carriers want to see things like if you have an office, you got an actual firewall. You do have MFA, multi-factor authentication turned on. You got some kind of controls around your personally identifiable information. That's email addresses, phone numbers, addresses, social security, of course, credit cards, of course. You've got some kind of plan and protections around those. You're encrypting your stuff. What does that mean? It means if someone steals a computer from your office or smash and grabs your car, you're only dealing with the loss of that computer, not all the data on it, along with a couple other things. That's a very oversimplification of encryption. For those of you who are tech, don't crucify me in the comments. Anti-malware, right? You got to actually have some security on the computer that's detecting for malware and backups. And this is important. You need to test those backups. We have a saying in our industry, and you might have heard this. I think Tom Lawrence is the one who taught me this system over at Lawrence Systems. So I'm going to say this one. Untested backups are just wishful thinking. They're not real until you test them. They want to see incident recovery plans, some training for your users, good passwords, responsibilities. You're not putting all the financial controls on one person that has unilateral exempt to send money out. They want to see you're offboarding your employees, right? If you fire somebody, you take away their access. And they want to see some third-party risk management, whether that's a pen test, a risk assessment. They want to see you do that. What I'm seeing more and more is sort of the baseline standards I see in these applications. Anything to add to this as far as what you're seeing consistently showing up in the applications?
No, I mean, patching strategy would be about the only thing there that I would think maybe you want to make sure that you're patching within 30 days, right? Within a month. But other than that, man, it looks really good. Like I said, you might see some stuff pop up like MDR, like PAM, but that's usually at folks that are at higher revenues, right? And that are in sectors like healthcare, municipality, manufacturing, and stuff that's had its teeth kicked in over the last.
I've seen a lot of white collar stuff, especially with like data and intellectual property. They want to see like SOC and like risk assessments they can actually attest to. And even on some of the more mainstream stuff, like blue collar sectors, like manufacturing, I'm seeing more of that as well, right? Like manufacturing ransomware has been a thing for a while. It really does hit. Like
people just need to keep in mind that every carrier has the autonomy to do whatever in the world they want to do, right? So if Logan went down this list and then your insurer you renew in a month and it wasn't on there, like that insurer may have changed their underwriting guidelines between this webinar and July. Like that can't happen.
We should talk about this for a second. We do have a little bit of time here. I don't want to get through this, but I am seeing a lot of carriers that didn't specialize in insurance just getting out, like cyber insurance, getting out of it, right? Like I've seen that on my side. I'm assuming you're seeing the same thing as a seasoned insurance professional. A lot of people, they didn't know what they were doing and they realized that, and they've been getting out in the years past. Have you seen that speeding up on your side of things?
I've seen insurers and I've seen agencies both do it. I mean, like I've seen people go, oh, hey, there's this shiny new thing in the corner and we think we can make money off of it. Let's just throw some stuff at it and see if it can't be a good revenue stream. Well, here's the problem with cyber. Attitudes about cyber in the United States, if you don't know it, we live in a free country and we're kind of proud of that. So telling people that they should do something that they don't understand very much about, good luck. It's going to be slow moving, right? So there are going to be losses, right? Cyber, the channel as a whole is really slow moving, right? So like, I mean, there's both on the insurer and the agency side. There have been a lot of people that have tried to stick their toe in the cyber thing and have gotten burned and pulled it out and gone, I'm not even going ankle deep.
Nice. Okay. Well, I mean, remember ICS, right? Like at the end of the day, what could have ICS done differently? Well, obviously not lie. How did they not lie? They could have shown compliance, right? They could have actually tracked it and put effort into tracking their compliance on the application. And then when it came down to it, they could have showed the carrier, hey, look, we do have this stuff and here's how we can prove it, right? When you can prove and track your controls with your insurance, you're going to have a much easier time getting your claim settled. Just saying, like, right? Like you can verify things. My humble opinion, and I know I'm biased, I do offer these. And we have a special offer that's been scrolling down at the bottom of our webinar for this entire time, which is an initial free risk assessment. It's just initial. It's not a full-blown thing, but it gets you started on a self-assessment. I recommend a third-party cybersecurity risk assessment. Why? Because whenever I need an objective look at something of what my gaps are, I don't usually look in-house. My team can be a little biased, and it's nothing against them. Seriously, it's nothing against them. They're a great team. It's just they're working day in and day out. A third-party objective view by someone who knows what they're doing and looking at it can point out real gaps in your security posture that you want to know about as business leaders to say, okay, we should do something about that, right? So you want someone who can test and verify your ongoing plan for compliance, see if there's any gaps. And here's the other thing too. Self-assessment's not going to fly. Not long-term. Self-assess is like saying, I gave myself a checkup at the proctologist. You're eventually going to have some problems, right? Like in insurance and carriers, I've been seeing more and more are catching on to that, right? Like they don't want to see you do a self-attested risk assessment or a self-attested penetration test, right? They want you to go, okay, show us a report from somebody who isn't you saying that you did okay on this or you did this thing. I've been seeing more and more of that. Not just in insurance, to be clear. I've seen it on government mandates. I've seen it on business partnerships. I've seen it on, I was doing one recently where a hospital chain here in Columbus was sending out partnership applications, right? And they made their partners like go through third-party audits, and the third-party auditor wanted to see, hey, when did you do a third-party risk assessment? And they put that checklist, and that hospital would not sign a B2B contract with you without the auditor's blessing. And that auditor would not let you get out of that audit without saying you had a third-party assessment and showing them the goods. It's needed.
100%. Yeah. And I don't know if you did this on purpose, but you said self-attestment at the proctologist. I mean, when I hear that, I think really you're just sitting there with your thumb up your butt, right? Like,
yeah.
So, anyway, but not to go down that road. But listen, I mean, like to your point, talking about a third-party assessment. Good buddy of mine. Shout out to Ben Hess. Ben's here in Arkansas with me. Ben did a third-party assessment for a healthcare unit. He found one single Excel document, right? Mm-hmm. Unencrypted, worth $1.8 million in cyber risk. One document, right? So like they get in, and I mean, like it was name, date of birth, social security number, PI, all this stuff, right? And it was sitting there unencrypted, and the quantification of that is like, hey, if this gets out here between ransom payment, notification cost, everything, credit monitoring, everything, it would cost the organization $1.8 million. Wow. Have somebody look at your stuff that is not within your organization, right? You think that's a valuable find? I mean, I remember he called me immediately and he was like, hey, I can't tell you the details on this thing because of, client, protection and privilege. He was like, but you're the cyber insurance guy. I thought you might want to hear this.
So that's awesome. I think that one of the things, this isn't a new concept either. Like you look at financial auditing. I have a bookkeeper. We have a bookkeeper in-house. I pay a CPA every year to third-party audit my books and tell me what my tax liability is just as a control against my own house practices, right? Could I, in theory, maybe pull that off myself? Sure. Do I trust myself and do I want myself to do that with the kind of implications of screwing up? No, I do not. That's the difference of tens of thousands of dollars for me every year, right? Like I do want to take that to somebody. Cyber is very similar in my opinion. You want someone who knows what the heck they're talking about. So you need to once you get your self-assessment, you need to figure out what your carrier is requiring on the application. You need to kind of make sure throughout the year, hey, we're still doing this. That's the other thing I see a lot too is we get this thing and we say we've got it on this application. Then we stop doing the thing throughout the year. And so you need to make sure you're doing the thing they're asking you to do on a semi-regular basis and you can improve that. Once you have all that put together, just make sure you have to work with a partner like Fifth Wall Solutions, find the right coverage for the right price and make sure they can help you read the fine print. That's a big one. I think that's what we're getting at here is read the fine print and make sure you have a qualified partner that can help you read the fine print. So as I mentioned, this is the last pitch I'm going to have today for this one, Andy. We are doing a special offer. For the first 7 people that scan this QR code or go to the following URL, cyber.tabernacle.tech/quiz, we're giving out a freebie. It's a 25-question self-assessment. Again, we don't recommend self-assessment, but it's a great place to start if you're not sure you're ready for the full cybersecurity risk assessment. Just do a quick check on yourself and say, hey, is there anything obvious missing here? Right? Is there anything obvious that I need to do that I know is going to be a problem no matter where I go to? Again, first 7 people to scan this, they get it absolutely free. we put about a $500 value on this thing because it took us a lot of time to put it together. So if you paid us to do that, that's about how much I charge you to put together this questionnaire. So that's what we're saying it's worth, $500, sir. Freebie for anybody who wants it. All right, man. Well, we are about 5 minutes over time, which isn't terrible for me because I like to yak. Let's go ahead and
I was going to say it's not that bad.
It's not terrible. So let's go ahead and introduce ourselves one last time, and we'll go ahead and call it a wrap here. I'm Logan. I'm CEO of TTS. We're a cybersecurity firm specializing in the SMB and mid-market and in proactively managing their cyber risk.
Yep. And visitor today is Andy Runyon, MSP Partner Success Manager with Fifth Wall Solutions. We're a cyber insurance specialist wholesaler, and we do everything cyber and tech E&O insurance and nothing else.
Nice. Thanks, Andy. Appreciate your time. Appreciate you, everybody. Have a great rest of your day.